Well, we stopped talking about the Friday moves. We've been a little bit lulled into complacency. We talked with CC and talk, maybe just like have one of these pinnings day, just stay in that range. Wrong. Sellers came in. They came in heavy. They came in off the open. They took some, what kind of news that was out there and they ran with it. Finished near the lows looking ugly. But what do they do overnight? They buy the dip. We'll discuss whether that's a dead cat bounce or not. We'll talk about the earnings we have this week. We'll have Eric Krull on at 8:35, and he wants to talk about those hot stocks, those IPOs, and pulling back a little bit. Is it time to buy the dip in those? Folks, it's a Monday. It's a full week here on Pre-Market Prep. Let's get things started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, traders, here we are. We're up 31 handle, 60, 59, 75. Went down through this area hard and just floating back up. We'll see what happens off that opening bell. Let's take a look at the buck. The buck is pretty much unchanged, up 7 cents, making a new low for the recent slide here. Not a good February for the buck. TLT, that's down 45 cents, 89.15. USO, finding support here at 75, but not moving out. Up 14 cents, 75.49. GLD up 71 cents, 271.43, consolidating near all-time highs here. SLV struggling, get over 30, up 9 cents, 29.68. Bitcoin survives a hack of a couple $1 billion, up $1,135 at 95,810. Big Christian, how you doing here? Welcome back to the big stage. Have a good weekend there in Saratoga.
Good morning. Yeah, very nice. Happy Monday. Happy Monday. Should be a very interesting day, interesting week, good weekend. Not that many sports on, so we'll cut the sports talk short. But yeah, I think this week is going to be very interesting. We got some interesting earnings reports this week too. Dennis?
All right. How about the Friday? Tell the Friday moves.
It was a very interesting Friday, and it's always interesting, when media, comes out over the weekend and they see the big Friday move and they have to grab headlines. And you see so many major media outlets talking about the big bear market, talking about, this, coming correction, that, oh my goodness. I mean, we got to give it a little bit of perspective here too, folks. I mean, we went straight up for like 3 or 4 days, and we've just been range bound all year. I mean, everybody is so, nervous about this market here over the weekend. At least the media is, and they're trying to scare people and spook people. But let's be honest here. We just gave back like the last 4 days of gains, and we've been in a range here, and we've been talking about the range bound trading. We've been talking about the fade trade. That continues. That continues to work.
Yeah, I mean, absolutely. I mean, I don't think you could really get too, or you want to get too down or too up on this market because we're just kind of moving back and forth, and it's shaking people out. And I think it is getting folks frustrated. But and that's fine. You can get frustrated about this market. There's nothing wrong with that because we've been now in this range and it's been tricky. There's been some things breaking out and they look pretty good, and then all of a sudden they kind of get slapped back down. What I find particularly interesting too, which we've talked a little bit about, is how weak these Fridays have been too. We saw for a while, I think if you go back to maybe like the summertime and around those months, that Fridays were a pretty good like trading day for the bulls. Like you either would have a nice like range, a nice trending day, or you would have some nice price action. But these Fridays, they've been pretty scary. So it's been better Mondays. Like, what do people say? Like the scary week, Sundays or something like that. But it's really been the scary Fridays. And I have, I've seen a couple days, so for instance, the S&P was down 1.7% on Friday. You go back 2 weeks prior to that, the S&P was down about 1%. You go back another, there was another big day down. But the point is that since the beginning of, yeah, here it is. On the 10th of January, the S&P was down 1.5% on Friday. So these Fridays have been pretty bad. And I know, Dennis, you were looking at some stats too about this.
Yeah, I mean, our good friend Ryan Dietrich here, and I'll just show this here right now. Just if you can see that, Ryan Dietrich tweeted out over the weekend here stats, and he said after today, the S&P 500 is down an annualized 86.1% on Friday. That means, just looking at if we took all the Friday's returns and ignored all the other returns for the year, we'd almost like crash down to nothing. That's how bad the Fridays have been. Now you can see Tuesday, Wednesday, Thursday has been very good. So I think there's a lot of reasons for this. One is the reason, people are ringing the register on Friday because they're nervous to hold into the weekend. They're probably nervous of what, macro headlines might drop. They're nervous. We've got DeepSeek once. We've been trumped before where he talks tariffs or something and says something. I mean, there's just a lot of macro headline risk. And it's one thing to hold over a Wednesday night and you have, literally 12 hours of overnight risk. When you hold over 2 days, where the Saturday and Sunday, you have a lot more hours of overnight rest. So I think that's a little bit to do with it. We're definitely in this macro environment where, traders are a little bit nervous to hold in through the weekend there. But I mean, good stats from Ryan. He's always a stat man, always giving us good stats there. I think that's just where we, why we're seeing, sometimes the weakness on Friday. But, here we have, a bounce back here today, Christian. I mean, thoughts here as we snap back rally. We didn't get any bad macro headlines. So maybe this is the relief rally that, hey, nothing bad was said over the weekend. We didn't get a DeepSeek. We didn't get a Trump dump. It's kind of just steady as she goes. So, is that why we're bouncing?
Well, I think there's a couple things. I think that, folks, I saw some people thinking, oh my God, this is going to be like a really nasty Monday. I personally would rather have us gap down here this morning. Like for the bull perspective, I would rather have us gap down a little bit. Friday, we talked about so nobody wants to buy the dip on Friday, right? So if you've got the selling pressure because of whatever it was on Friday, a couple headlines, options expiration, but you don't have that buy the dip mentality on Friday. So here comes Monday. Some people are looking for like the other shoe to fall off. And we're bouncing here, but it doesn't, to your point, it doesn't seem like a very strong bounce. And I think what I'm waiting for is basically to see for some names to see if like, hey, down 5, down 10% for some of these names the last couple of days are we going to see that buy the dip mentality once we open? Because I think this is a pretty weak bounce so far to start. But that's what I'm really interested in is are buyers are going to start to come in and say, hey, is this a buying opportunity or am I going to remain on the sidelines? And I'm referring to like those big institutions.
Maybe something what you were saying, Christian, too, and I want you to show, talk about some of these stats is we definitely have pockets where momentum has completely broken, though. So, I mean, we obviously know the S&P is very diversified. We saw some value names picking up the slack a little bit on Friday, aka the consumer staples, defensive stuff. This morning, kind of the same thing. We're seeing some value names hold up fairly well. But you were talking, moving away from the IWM, you were just talking, the momentum names like Palantir. The momentum completely broken there. Obviously, you've got Kathy, ARKK, who, trades and holds a lot of pure Momo, basically. She got killed last week, absolutely killed. I mean, and you were looking at other stats here too.
Yeah, I was looking at because going into last week, remember, of course, last week was a holiday shortened week, but I was looking at things that look, whenever I do my weekend analysis, I always look for this to see like what's breaking out, what sectors are looking strong. And I was looking at things like cyber stocks, which is CIBR, had broken out like very, very strong. I was also looking at, you could see what happened to those towards the end of this week, or towards the end of last week. You could also look at the IBD 50 ETF. That's ticker symbol FFTY, because that was also at new highs and breaking above. If you look, that was at new highs for the year, new highs for over the last year. So it was like, wow, the momentum trade is really working. That ticker or that group was down 12.3% last week. So really got hit over the head last week. also ARC you mentioned was down 10%. So some of these groups, because I think we kind of think about corrections at around like 10%. Some of these groups had a correction in like 2 or 3 days,
Yeah.
which is very, very fast, and that's not easy, especially for retail traders. I was out with some friends over the weekend, and who are like casual traders, and they were like, geez, they're like, what happened to these stocks? And I think one of the things too is like to put things in perspective. And like you did very well with looking at Palantir. I think you had a short on at one point, but you look you look at the price to sales in a Palantir, and it's like an 80 or 90 price to sales. So you have to have some perspective and say, wow, these stocks have really gone up a lot, and they're very suspect to once the momentum changes, it's going to be twice as fast on the downside. So that's one of the takeaways that I thought. Just a number of these momentum names have just run too far too fast.
Now, the market doesn't live just on these momentum names, no, though it does live on other stocks as well. And that's why I think to go and, just call for this big bear market to happen overnight. I mean, the S&P was really resilient on the first day. Think about Palantir on that first day last week, the Wednesday. The S&Ps, made new highs that day. So Joel, you're an S&P guy, obviously, and, you look at, Palantir and a lot of the Momo names just basically collapsing on Wednesday. That fell, and obviously the follow through continued into Friday. But I mean, the S&P's held up very well until Friday. So I mean, the S&P can hold up, it looks like, apparently, without those Momo names, because other names can pick up the slack.
Yeah, I was looking at the IWM, and I saw it mentioned over the weekend, and I think it was Barron's or something I was reading, and I'm like, boy, I wish I would have looked at that chart on Friday, because I remember thinking about the
Gosh.
230 level, and boy, oh boy, it was not only was it was way off that level. I mean, you're looking at that chart, and yeah, trading range. Well, while the S&Ps were abutting against the all-time highs, man. IWM was not, and then that also led the charge on Friday. Also, I just want to comment on this whole Monday thing, and that's been going on for a long time. That
Ugly
the
Mondays.
big moves or things happening over the weekend. We can go back more recently to the Deep Seek. Right. We've also, I don't think if the Russian Ukrainian war, I think that started over a weekend. And then I'll check your guys' memory. Another big thing that happened on a Sunday, which really shook up the markets, and I'll test your history knowledge a little bit. August 15th, 1971. Do you remember what happened then?
Not that history. You think it goes back to 1971, Christian. We weren't even born.
The Cuban Missile Crisis.
That was earlier. That was used. I
Ah.
actually did a paper on the Cuban Missile Crisis, but no, it was nope. It was marked the beginning of the end of the Bretton Woods system for fixed exchange rates.
Holy.
Yeah,
Okay.
boy, that was wild.
I'll take your word for that on that one.
Well, I'll take your word for that.
That's what
I won't
happens
be
when
able to
you're
go
an
into
old guy.
analysis on the Bretton Woods.
All right. Do you want to talk about everyone's favorite investor, or
Yeah,
let's
yeah. Jump into Warren.
Okay. Do
Highlights
we
from the
want the
call.
numbers? I mean,
The numbers don't matter as much as, what is he saying? It's always about Warren Buffett, obviously. You can give some of his numbers if you want, but it's not about his numbers. It's all about what is he saying. So, do you have some of the commentary there from the call, Joel? If you don't, I do.
I just got rid of it. Let's see here. Boom, boom, boom. No, I don't. No, I don't have any of the $325 billion in cash, largest
Well,
in
that's
over
what you need to know. I mean,
Yeah.
that's really the main thing, is that he is still hoarding cash. I mean, obviously Warren Buffett is the ultimate value investor, and he sees stocks like Palantir trading 100 times sales, and he is not interested in any of those things in the least. Obviously he's looking, and he's been like this for a while, so he has definitely missed out on some of this rally. Although the financials have done very well, and it's probably brought Berkshire up with it, a lot of the stocks that he's been buying as of late have not been working, because we've been in still the last couple of years it's been Momo names. I mean, you look at Sirius XM, where she's been accumulating, that hasn't been great. And you look at the Alta purchase, which he got in and out of, and that one wasn't great. He hasn't been hitting it right out of the park, that's for sure, on his recent purchases. But It's still Warren Buffett. He still holds to his core things that value wins in the end. And it always has in the market. So, I mean, if he's still raising cash, he's just seeing this not that much value out there. And I think that is something to think about too. I mean, if you're sitting here on margin, we're not saying, we got a coming bear market here, but we don't know that we don't either. I mean, from my own long-term investments, I've got some conservative stuff. I've got some aggressive stuff. I've kind of got a diversified portfolio, but I see what he's talking about. I mean, there's a lot of stocks. Like I've argued for a long time on Apple, and that's why he's been selling Apple. I mean, Apple 33, 34, 35 times earnings is as expensive as it's ever been. So I don't know. What are your thoughts, Christian? Warren Buffett is still hoarding cash.
Yeah, I wish we would have heard like questions or why he's, why exactly is he doing it? Is he, I think it's my guess is it's a combination of he's just not finding things that he thinks are attractive. Or is it more that he just thinks that the market is due for some type of move down and he's buffering against that? I don't know the answer to that question. One thing that I did hear that I thought was interesting, and Bloomberg has a nice slide on this too that they put out over the weekend, is that he did say that he's going to be kind of nibbling or looking at Japanese banks.
Mhm.
I think this is one of the most interesting stories so far in 2025 is the number one is the cheapness of international versus US. And everybody seems to be now in the same camp that US securities or US equities have gotten a bit expensive. And if you look at the performance year to date, I mean, there's a really nice outperformance of international stocks to US. I mean, both developed international stocks and emerging markets, and of course we know about the China story recently, but there is some major outperformance that is going on outside of the US right now. Part of that has to do with, I think from possibly like a technical standpoint that things just really got pushed and it's like a reversion to the mean. But I think also, I don't know if you have that, if you could bring up that slide, Joel, that I put just in our chat with the talking about
Yeah, let me
the
go back to it.
expensiveness of global or how much more expensive global stocks are. Sorry, U.S. stocks are to global stocks. So yeah, there you go. So that's a chart out from Bloomberg. I can't for whatever reason I can't speak this morning. But you
Me
can see
too.
like
Tongue twister.
people are really looking at the fact that international stocks are so much cheaper. And I like how Bloomberg breaks this out between different regions. So they're looking at Europe, which is the blue line. They're looking at China, which is the orange line or red line that's really started to move up recently. And then I think they're also looking at Latin American stocks too, which are much, much cheaper. Now, again, you can make arguments about whether cheap is good or whatever, but it's the fact that some of these areas are in double digits now year to date versus what the US is doing, which is close to flat.
I mean, that argument's been there for a long time, that international markets are relatively cheap compared to the US, but we know US is still outperformed. Is it different this time? I mean, so far in 2025, absolutely. We've seen, the China stocks, which have been dead money for 10 years, really come into life. Does it continue? The one issue I'm going to have, and we bring it back to Trump, is, I mean, if we continue to see China outperformance here,
Yeah.
we know Trump is rah rah America. And obviously, it's a concern, for me that, he's been relatively easy so far on the tariff talk with China. But if we see China stocks just start to blast off, don't think that they can't get, trumped, where he comes out and says, okay, we're putting tariffs, on, everything coming in here on China is going to be 25% as well. I mean, all those stocks get killed overnight. So that's the wild card here. But, to other people's points, Trump was in here in 2016 and China actually did pretty good in the first couple of years of Trump's last reign here. So it's not necessarily that he's going to be hard, and he's been pretty easy talking on China so far, and that's probably why China stocks are rallying as well. Also, it helps that Xi is seeming to getting behind his stock market a little bit more than he was
Yeah,
before.
yeah.
Talking about bringing these multinational corporations up and a little bit more away from the privatization of so much that China is. So, we've seen stocks and, Alibaba just having a hell of a run here. It's been really good. It's been such a run, though, that I'm like, at this point in time, I rang the register on a little bit. Now, JD really hasn't run nearly as much, so maybe there's some sleeper picks. Baidu has not been great at all. It hasn't really run at all. It's pretty much been Baba, Baba's kind of, just run with it. A few other ones too, but Pinduoduo has run up a bit, but nothing like Baba. Baba's just been incredible.
And
I
Morgan
think
Stanley.
the chart that you brought up, Christian, I think that's what the market's saying is that if Trump goes through with these tariffs, it's going to be worse for the U.S. and it's actually going to be better for these other countries. I mean, if that am I wrong in saying what that chart's they indicating here that I mean he's doing this to punish the other countries, but when you look at that, it looks like there's gonna be ways that perhaps they're just gonna get their stuff somewhere else, or they're gonna send their stuff somewhere else. It's gonna be hurting the U.S. companies, I think, more.
It's, I mean, definitely possible. I just wanted to bring up too that there's a note up by Morgan Stanley with, I think a little bit late to the party given the move in Alibaba, but they come out and they put out an overweight rating this morning. They upgrade Baba from a equal weight to an overweight this morning with a price target of 180. So I think that's kind of interesting. Not this particular note on Alibaba because I think that they're very late to the show. But
Sure.
how many of these brokers are going to start to kind of have to come out, and they've been kind of behind a bit and say, hey, we're going to upgrade this international stock or this international stock. So that could be, and I actually was looking at the chart of JD.com this weekend.
Yeah.
Because I'm starting to look at other things because I think that Alibaba move has been, I guess at this point, the last thing, that we saw towards the end of the week was, who was it? I forget who came in with $1 million investment.
Michael Berry.
No,
Berry.
no, it wasn't him. It was
Oh, no,
Elliot?
it was Ryan Cohen.
Ryan Cohen. Yeah. And that, okay. So that to me tells me like, that's like I don't want to say last leg, but it's like the last momentum leg if someone's coming in and saying that. But so I'm starting to look for some other names there. And JD.com is one of those names that I'm looking at.
I mean, just looking at valuations in itself too, and they're all still dirt cheap. But sometimes when we're moving into a value market, which it appears we are to a certain extent right now, it's a good exercise. Like Alibaba's 14 times forward earnings. We know it was 10 times about 6 weeks ago. It's just moved up that much. JD.com on a forward basis is only 9 times forward earnings. So I mean, the argument for value is definitely there with JD. And I mean, always China doesn't use GAAP accounting, so you got to take these numbers with a grain of salt. Pinduoduo is 10 times. Baidu, which I've talked a lot about on the show, and I have a big position in Baidu, which just has not caught up, is trading at 9 times as well. So, I mean, pick your poison. Baba's been the best to breed, but it has expanded from that 10 to 11 times. So the question is Baba, an indicator for what JD and Baidu and Pinduoduo are eventually going to do? Is it a leader here, or is it just a Baba rally? That's still to be determined. But, I mean, value, you're getting a pullback in all these names here this morning. JD, Baidu, all down again here this morning. Maybe it's a, sell a little Baba and pick up the other ones if you think there's a catch-up trade to be had here. Fade trades have worked. I mean, I wouldn't be against picking up some JD. I mean, increasing the international exposure. JD was an excellent stock a few years ago. Think about that when it ran in 2020 from $20 to $100. I don't think it's doing that again, but is it out of the realm of possibility to think of JD as a $60 stock? I don't think so. You know what we needed from the weekend? We needed Buffett to be buying some of these China names, and that would have kickstarted them. That didn't happen, though. He didn't talk about that. So there's value in places.
Someone mentioned YNN. I know that's an ETF. I know Christian, you mentioned that before. And then what's always widely followed is the old KWeb. And I mean, on these charts, and I mean, we've seen things do round trippers before. I mean, all-time high over $100 is something like KWeb. I mean, you could just say this rally's just Baba too, and I mentioned this before. I mean, back on the monthly when Chi was just, remember they were going to do Ant and they like canceled Ant. I mean, it was like you couldn't have got more of a series of like bad news, like all during this decline. You had some intermediate bounces, but now, man, you haven't seen look, just for an example here. You haven't seen a green. This is still February, so the month isn't over. But you haven't seen a green monthly candle like this. Well, COVID, that's a little bit of a different situation. But after that, you had 3 more months of ripping monthly bars. So keep an eye on that if you're thinking of just rushing out of your BABA. And now, also, on pullbacks now, I mean, you're going to, even though that chart straight up, you're going to find people that want to try get into it. Let's get one earnings report in here.
Sure.
Can I just jump in one final
Please.
note
Sure.
on China? So I just wanted to mention, I did sell I was talking a lot about KWeb over the last couple of weeks. I sold my KWeb position just because I thought it was up too much, and it was making the rest of my portfolio look too good with it being up too much on Friday. So I did sell, but it's KWeb is down 2%. So I'm actually looking to kind of nibble back in here too. And that's kind of what I'm looking for too. So I just wanted to mention that real quick, that I'm out, but I'm going to be looking to get back in today.
I think buying the dip on the China stocks is a good call here. And I actually am looking at, I'll look at JD here, maybe even Pinduoduo, although I'm not as sold on that one. But I think it's not a bad call to start thinking about, on the pullbacks to be diversifying out, because if we do get this huge correction in the US, we can see, international markets, aren't that correlated right now. Obviously, if we get into a big macro thing, it can all go down. But definitely, China's picking it up.
All
Joel,
right,
earnings.
we got to miss Domino's Pizza. That's a warrant
Delivers.
stock.
Oh, no,
It misses 489 versus 492. Miss on sales as well. They increased the quarterly dividend. People from 15%, so people like that. But the double miss here, I'll make one technical comment. I'll let you guys take it away on the Ann Arbor, Michigan company. If you've been waiting to buy this at the 50-day moving average, well, you're trading it at like a 2-point discount to it. So there you go. Also some monthly low or daily lows at 40. Dennis, how you looking at Domino's?
Well, you got to watch valuation when you're trading, something like it, and it's a consumer staple. We can call it, a restaurant, whatever you want to do, but it's a staple. It's conservative. The earnings are steady. People are still ordering their food. It's like, what are you paying for that though? It's not crazy anymore at 26 times. At one point in time back in 2021, when the stock up to $567, I think the multiple, I think we covered it, Joel, was 42 times earnings. I'm like, you're buying 42 times earnings for a pizza stock? And obviously, since that point in time, they've grown earnings further. But, the stock has gone nowhere. So I think, when you're talking, stocks that aren't technology, aren't AI, aren't super growth engines, it's about what you're paying for them. And I mean, I've said this for a while with Walmart too. It's just gotten to a point where you're just paying too damn much for those earnings that, aren't really growing that much. So Domino's Pizza 26 times, it's where staples trade. 20, 23, 25 times. So it's coming in where it isn't super expensive anymore, but it's not super cheap either. It's just kind of there. So, I mean, $400 maybe on Domino's gets more attractive, but I'm not ever buying stocks when, the reports aren't that great.
Christian's giving us the sector look at this, and besides from all these people going to Chili's, that eat did sell off that report. But we'll talk more about this with Eric. But Kava, which is due to report this week, that's had a nice haircut. Also, man, I did talk negative about CMG a couple weeks ago, and man, that's right. That's right back down though. So those places are getting more expensive, right? They're not, you're spending 15, 20, $25 when you're going in there. So Domino's Pizza, Christian, you have any technical comments on Domino's, or should we move
Not
on?
Domino's, but I was going to show a chart of
Okay.
consumer discretionary versus consumer staples. This is one chart that has me concerned. Let me see if I could just do this really quick.
Yep.
XLP versus XLY, and I'll share the screen really quickly. Share screen, entire screen window. Here we go. All right. So take a look at, I like that you could do this in TradingView. You could do this in some other trading applications too, but take a look at the chart of XLP versus XLY. So the restaurants, Domino's and so forth, I don't really have a major thought on Domino's other than the group is getting kind of smacked right now. So it makes me not want to buy the dip, especially to Dennis's point with something that's still expensive. But look at what's been happening here. Consumer staples are catching up to consumer discretionary. This is a risk off type feel. So while we're kind of contemplating like last week's price action and so forth, and we're still trading in a range, I'm watching things like this for clues. So I don't think that you really want to see consumer staples continue to outperform consumer discretionary like they have over the last couple of weeks, because this is a risk off feel, and this is definitely something to keep in mind, or keep on, keep watch to see if consumer staples are going to continue to outperform, because that is a big risk off gauge of the market.
People are playing defense to a certain extent, especially in the last few days. So when you see a sell-off in the Momo names like the Palantirs and the loved retail darlings, they often flock to consumer staples. And I don't think it's a coincidence the XLP closed right near the highs on Friday. So you had such a terrible day where everything was down, not consumer staples on Friday, because it's playing defense there. It's never a great idea to chase consumer staples here either. I mean, 76 to 82 is about a 9% move. They're up so far in since the bottom of a couple weeks into 2025. That's a big move. I mean, consumer staples, you're in there for the dividend. You're in there for a little bit of, extra, maybe like 4 or 5, 6% moves. 9% in 6 weeks, the big move. I think you're late to the party if you're loading up consumer staples here now. If the market goes to crash, maybe that's a different story. But again, I'm in the camp of fade trade. So we're just talking overall. I'm in the camp where you're still range bound. XLP is coming to the top of the range here. So I think, 83 to 84, I think you're lightening it up and maybe reloading at 78 to 80. Like, I think you just keep, don't get so sensationalized by media headlines who are trying to grab clicks, because they're all talking this morning, the big correction, it's coming here. Barron's probably, front page. I don't know what was on Barron's, but just don't get caught up in all of that. Just, think about what we talked about at the beginning of the year. It's going to be a lot tougher year, fade trade, choppy. I mean, that's what we're seeing so far. So I think we stick with the theme that we're seeing. Don't get caught up in the sensationalized media.
Hey,
lots of breaking news here, Joel, too. I want to get to.
Yeah. Headlines. Starbucks. Go ahead, Joel.
Yeah, say the Starbucks. I was going to say that one. Give us to us, Christian.
Starbucks to cut 1,100,000 corporate jobs worldwide. So just as we're talking about restaurants, that kind of fits in there too. So they're cutting some jobs worldwide.
Yeah, so Starbucks getting a little bit of a pop here. Joel, we're not showing our charts here, so we're going to show
those. I'm sorry.
Yeah, we're bringing it back up. Just, a little pop here. Also, other breaking headline we're going to go is to Tesla. Tesla was down over $4 here this morning, just breaking at 830, a little bit before that, 820-ish. Tesla prepares to deploy long-awaited FSD features in China. That was from Bloomberg as well. So you're seeing a big pop here in Tesla in the last few minutes. Obviously, we'll talk Tesla over Starbucks because Starbucks kind of just boring. But Tesla, this is a big move back, a snapback rally. And I think this is the risk to the bear thesis on Tesla here too. I still have a core position in Tesla, but I've lightened it up significantly. You know why? Because of the Musk factor, and I'm just not sure his political views aren't going to cost us a lot of car sales. But with that being said, I was at the beginning, before, I was worrying about, the Musk political views, is there's going to be a lot of headlines coming this year that are going to be very positive for Tesla. There's going to be, new things, new features, new stuff coming. So here's another one. There's headline risk for the bear thesis because there's so many cool things that Tesla is working on. So, FSD obviously over in China is a big thing. So you're seeing the 7-point pop here this morning. The question is, is the momentum stalled? Is valuation become, we've seen the other Momo stocks starting to get hit here. I just don't know, 345 to 350 are probably going to run into major resistance here again. So it's hard to get rah bull and say, yeah, here's what we need, 339, let's go 600. We're just not in that Momo market here right now. So I think even if you ignore all the Tesla Musk concerns that I've been concerned about, I just don't think this market's got the gas, pun kind of intended because obviously it's electric, but to really get this stock up and going here. So I think it's an algo rally here this morning. I'd expect major resistance up at 350 for Tesla.
Wow, we are so far off Friday's high. I wish I could give you a better number. That was 354.98. So I don't know. I think you have to pick a retracement or the daily pivot and something like that in Tesla. But definitely a nice move off the news. But it's 8:35, and I'm going to remove my charts. And you guys know what we do at 8:35. We have a guest. Mr. Eric Krull, author of the Lifecycle Trade. Eric, how you doing today?
I'm doing great. You guys sound like you're doing great too.
Well, thank you. We love talking to investors and traders and having experts on like yourself to talk about the markets. And like I actually come on like every month and a half or so, and I'm like, oh well, there's really not much going on in the IPO about but under the hood, there is a lot of stuff going on. So I'll let you take it away. I mean, some of these stocks that were darlings are not darlings anymore.
Boy, that has been the news the last 3-4 weeks, hasn't it been? Um, the ones that were IPO'd in the last 3-4 years that were performing tremendously have corrected a lot. I mean, I was looking at stocks over the weekend. They were down 15 to 18% in 1 week alone, erasing a lot of their gains. You guys talked about Kava, and we were talking about the restaurant group there. Kava has been the darling, right? And then all of a sudden you look, it's been correcting. It's been having a tough time really for 3 months now, and they have earnings this week. I'm really going to be watching that closely to see how is the market going to treat their announcement. And it's never about what they report; it's always how they report, right?
Yeah.
And so we'll see. That could be if they reward it, that maybe that's the beginning of a comeback. But if they really punish it, watch out. There's already been a couple, sell signals on it in terms of, I don't mean sell everything, but you could have lightened up on that in the last month or so, especially when it went below the 50-day moving average pretty sharply.
Do you think the recent sell-off, though, maybe lowers the bar to a certain extent with Kava? Because we just came from 140 like 9 trading days ago. Now we're 109 this morning. Do you think, Eric, now that, obviously it's still a growth stock, it's still going to have some pretty good numbers. Do you think now that bar is lower and maybe, it just pops up just regardless if they can beat the bar? Or what are your thoughts just, on the recent weakness?
I think that's a great point. I do think that's a possibility. When you've been punished this much, and then all of a sudden the numbers come out, and then people look at it like, "Oh, it's not as bad as I thought." I think it does lower the bar.
Okay, let's just go in general here. IPO activity. We're early into the year, 3 kind of lean years with all coming out of post pandemic and interest rates certainly not being favor here, but you're getting a little positive on IPOs. Talk about the pricing activity and the money raised.
It's interesting, and I get my data from Renaissance Capital, a great source of information on IPOs. Like they show on that chart on the left. There have been 31 priced IPOs so far this year. That's up 55% over the same period last year. And then you look at the proceeds, that's up 14%. So when you're up 55% in number, but only 14% proceeds, there's a lot of small ones here, okay? But I think, when you go 3 years without a lot of activity, and in general, people are positive about the economy, I think this could be a year where we see more. But what we really need are some of the big name ones that we're going to talk about. And I think that right now, with the way the market's acting, especially the way they're hitting growth stocks, they won't be coming out now. They like a better market. You never come out in a bad market, right? So, but let's go to the next slide. And I'm looking for these names. I think there's some really good ones here in terms of size and name recognition. And if we can get a few of these to come out, I think you might see a better IPO market.
Well, you got some big names up there.
SpaceX. Holy. Right there is the number one that I want to see. Do we have a projected date, or this is still just rumors here at this point in time on it, Eric? Because obviously, you see some big names up there. Discord and SpaceX would be the number 2 or the 2 top ones that I'm seeing there. But SpaceX, everybody's anticipating that. I mean, you've got this, to stock that I've talked about before in the public markets, DXYZ, that has like a 12% interest in SpaceX, and that stock just blasted off,
right,
fully intended, in November and December, that ETF, just because it's got an 11% interest here. Do we have like a date projection for SpaceX, or we don't know?
No, it's still rumors. It's still all speculation. We have to wait till they file, right? They have to file, and then we'll get some more ideas. But yeah, I'm with you. I think that's the big one. I mean, there's no other competition. I mean, Boeing's been trying to get their rocket to work. They brought people up to the International Space Station. They weren't sure they could bring them down safely, so they came down, and left those people up there for 6 months. And you're looking at with the government not doing it. We don't have anything in NASA that's ready to go. This is it. That's the one.
Do you pay attention to the price action in the private markets in these?
No, I don't, because there's no really good source on that. I mean, every once in a while, someone will do a private placement, and then you'll hear about how the price went up from the last time. I mean, I pay attention to that a little bit, but there's no really good way to track it.
Hey, Eric,
All right, so we're talking about the life cycle, top IPOs since 223. Let's talk about what these stocks have done, and now the reversal. Is it just healthy pullbacks in some of these stocks? Do some cherry picking here. We know some of these very well, and others not so well.
It doesn't feel healthy, does it? I mean, if you're in them, it's been painful. But I think in general, we have to remember, and I haven't talked about this too much on the show before, but this is the time of year where almost always we get a pullback. If you go back the last 5 years, and let's not talk too much about 2020, where this is COVID, when it really fell, but typically somewhere between mid-February to April 1st, there's always a pullback. My personal feeling is this has a lot to do with capital gains taxes, where people, if they've had a good year, so we've had a good year the last year and a good year the year before. If you've made a lot of money in stocks, you have to pay capital gains taxes. And so somewhere between, you start filing your taxes. People start doing it in February after they get their 1099s, and all the way up to the tax filing date. There was almost always a pullback. If we pull up weekly charts going back a few years, you'll see that somewhere between, mid-February, maybe sometimes as late as March 1st, we start to pull back. It feels like we're doing that now. And then somewhere right around tax filing date, we start to come back up. So it's not too unusual for the market to do this, especially in growth names. I mean, imagine if you made, I don't know, some pretty good money in these growth stocks in the last year, and you cash some in, all of a sudden your tax bill comes. Where are you going to get the money from? You don't keep that in your checking account. You're going to sell stock.
Eric, this is a great list, and especially I like that you have the percentage gain from day one. We were talking about this in the beginning of the show of how much some of these names have gone up, and it's pretty incredible. I mean, look at the nano nuclear energy is up 450%. So you look at some of these gains, and the word that I was talking about this weekend was perspective. And yes, to your point, like some of these names fell 10, 12, 15% last week. But when you're dealing with gains, or even like a Reddit, which is up 230% to 230%, these are amazing moves. And it kind of just puts it in perspective that a 10, 12% move doesn't even dent what these things have done. Any names, and I was looking at one name that reported last week was this Waystar Holdings, which has been kind of quiet. It hasn't been talked about too much, but that's a pretty good looking name. Going through these names, are there any names that after whatever the move was last week, down 10 to 15, 20, even some 20%, any of these names that you like in terms of buying the dip after that type of move, or do you think they still have gone too far?
I'm really interested in Palantir finding some sort of a bottom and to go sideways for a little bit. I think that one has a lot of potential. I think it's down this morning. I looked pre-market. So I would say, so you're looking at, I don't like to try to catch a falling knife, right? But I do think if we could go sideways for a week or two, that would be one I've really got my eye on. I'd like Viking Holdings, the cruise company, to go sideways a little bit. It's had a great run. It's been a great since the beginning, nice steady uptrend, pretty sharp uptrend. But I'd like to see that go sideways as one to buy. Nano nuclear is an interesting one. However, boy, is that one volatile. That one is one of these nuclear companies is going to sell one of those so-called small nuclear reactors, portable nuclear reactors, and when someone does, it's going to take off that industry. But they don't have any sales yet. It's very an interesting concept.
Are these stocks that you're talking about here, Eric? I just want to go into, obviously these are all Momo names here that you were just talking. Obviously IPOs gravitate, they get into the Momo. A lot of these don't have a hell of a lot of earnings, so they're building on a growth story here.
Yes.
I mean, I look at that NNE, This stock was $45. It's right back into like the lower end of the range here. I mean, maybe there is that, as much as we want to talk about the coming bear market and the media wants to talk about this, I mean, there's a lot of stocks here that actually have sold off substantially from their highs. Palantir is still way off, or from the, it's still, got a long ways to go down to get to its support levels. But I mean, this NNE is an interesting one here. So is there other ones that you're watching on some of these other IPOs and maybe have come down enough that you're starting to nibble?
Yeah, Kava is one that if we want to pull up a chart of Kava, that'd be great. I like the way Kava looks, but I'm not going to buy it going into earnings because of what we talked about earlier. I should say this, until Thursday, it looked really good. After Thursday and Friday, it was like, oh, it broke through support. I want to see it come back. Kava had, it looked like it was getting support at the 50-day moving average. And then all of a sudden Thursday, it burst through it. And then Friday, it went through it even more. But Kava's one I'm really interested in maybe getting some more. And that's a great chart. You can see how it went through that 50-day moving average on, was it Wednesday? I think it was. And then Thursday, it tried to hold firm. And then Friday just sliced through that like a hot knife through butter. So I want to see that firm up. And maybe the earnings will do it. If we can go above that 200-day, back above the 50, I'd be really interested in that one.
You ever had the food?
I have. I've been lucky twice. I went to the original restaurant in Maryland with a friend, and it's not like the rest of them. I mean, you think of it as Kava as like the Mediterranean Chipotle, but not the first one. It was a sit-down restaurant. And they served drinks and everything. I've had the food. I like it. The service, and the one in Chicago that opened up last summer, service was slow, but they were packed, and it was okay. I thought they. Being a newer restaurant when I went, I think they needed to upgrade the quality a little bit. How it goes when you expand fast, maybe sometimes the quality falls if they're not set up right with the right management.
I mean, this is amazing. 130, just as you mentioned, on Wednesday, it sliced through the 50-day moving average. And then on Friday, it sliced through the 200-day moving average.
Yeah.
But you go from 134 down to 108 on basically no news, and, so if you liked it before and going into earnings and the stock was at 134 and it's at 108, I mean, it does kind of set up. And, I'll be interested to see if Dennis plays this one for a little bit of a reversion too.
If it goes up, I bet he does.
What day does it report?
I think Tuesday. I think it's Tuesday after hours. Yeah.
Okay, you included charts of these three stocks: Maple Bear, Arm Holdings, and Dutch Brothers. Wow, I didn't know Dutch Brothers had that kind of move. Tell us what you. I mean, these all look pretty lofty here. Give us your analysis of these three stocks.
Okay, Maple Bear, also known as Instacart. You can see that very first week, that big blue bar, and it had a long drop and then undercut. And you know how I like to see stocks undercut their day one low, and that one really did. And then it started to come up, got near 40, and then corrected again at a nice smoother cut base. And then when it got past that first week's high, we call that the turbulence zone. It bounced around, and now it took off. So to me, this is the what we call the institutional advance phase. It looks extended from at this point. But if this one went sideways or down a little bit, I'd be interested there because now we're in the institutional advance phase. ARM Holdings been pretty choppy. They have been benefiting from the AI craze with they make chips. I want to see it smooth out a little bit, but if it can get back above near the 180 point, I think that's a buy. And Dutch Brothers, it had its IPO advance phase, went all the way up to 80. Then it way undercut, and like 91% of all IPOs, they eventually undercut that day one low, and they went in a nice long smooth due diligence phase. And then when they got back up, they started to rise. There was a buy point or two as it got in the 40s, and then look at lately. I think that must have been an earnings announcement where it took off, but that's a stock where it's also beginning its institutional advance phase because it's past the old high, which we call the turbulence zone. So that's why I'm watching that one.
All right, we've been on the line with Eric Krull. He's an author of the Lifecycle Trade, walking us through the IPO market, the ups and downs and all around. Eric, always a pleasure to have you on, and we'll be dialing you up again here real soon. Thanks for coming
looking forward to it.
PreMarket Prop. All right,
Thanks,
here
Eric.
we
You see you guys.
All right, Triple D. What Triple D is seeing anything interesting out there?
So again, Tesla probably, is the most interesting because it came out with the news about 8:20 and it has popped up about 9 points from where it was trading here, stalling a little bit. 345 we just got up to. Maybe you can show your charts there, Joel. I know you stopped showing your charts.
Yep.
We'll bring those up. Just looking at pre-market, I do think like it's been a pretty good pop. I think if you get up near that 350, I think that's an area where profit takers probably going to come back in because we were holding that. That was the old resistance back in November. We did cut through it in February, but then we got back up and held that for a few days. It's just prices memory. We talk about that all the time. I think it's a big level. I think there's still people nervous a little bit too after Friday's big whoosh down. The probably appetite for just coming in and taking on more risk is a little bit subdued. And to Christian's point as well, with the XLP being very strong, you can clearly see this market's a little bit less, risk on here right now. So you get a risk on move here today with a lot of other stocks popping too. I think you're getting a dead cat bounce in Tesla. I think you're getting a dead cat bounce in a lot of stocks here today. Christian, your thoughts?
I agree. I have alerts set. Bros is one of those names where I just look at what this did on earnings, and I just feel like there's a bunch of stocks like this that they seem to have gone up a bit too much. That earnings gap from $64 up to 84. Like I still like that name has to come down more for me.
Yeah.
And I'm interested in it. Like, I think that this is because I'm always interested in names that have really good earnings and are showing earnings, sales, earnings growth. But it's that move is just too much. And I think that's a story in a lot of stocks. So, while I want to be buying the dip, like Bros is not going to be one yet. I think it's got to come down almost to fill the earnings gap, almost down to like $67. I'll be a buy. Like that's really where I want to pay attention to it. So the reason why I'm talking about that is just because I'm still not ready yet to be, buying dips in something like that. Now I'm looking at something, there's a whole bunch of other names to kind of look at. Like I'm looking at SE, right? Which is, I know we talked about China names, but SE is going to be one that reports like this is another one that dipped. I'd rather kind of like, I'm leaning a little bit more towards international. But I've got my list of names that I want to be buying the dip this morning. That's one of them. But do I need to be doing going right out right away doing it? You have to be a little bit careful. I did this last week with Hood, and I got this name looked very good pre-market, and I took some profits because it was up. There was Coinbase news on Friday morning, and I took a target. I felt great. I was like, oh geez, this was a great trade that I added on Thursday, and then the bottom fell out with this thing on. So that's a name that I'm going to be watching. I'm now like down in this name. So, but do I think that this is a good name like going forward? I do. I think that the earnings were spectacular, and so this is a place that I want to be, but I can't hold it if it continues to get walloped like that. So that's what's going on in my mind is, do I want to be adding to any more names, or do I want to just let them do what they're doing a bit and let them continue to get unwound? So I think go ahead.
Sitting on the sidelines, Christian, like sometimes that's an option here too. I mean, you don't have to take these trades on, and maybe you move to the sidelines, to lighten up. I mean, we are definitely still in this market where selling the rip is working very, very well. Spinner making some fantastic points here in the chat this morning. Spinner's been with us for our entire show for the last 12 years. We've done this show. DKNG pops on the earnings, goes up, looking strong. Boom, has given it all back. Shake Shack pops up on the earnings, looking strong. Boom, gives it all back. I mean, if you're chasing in this market, if you are chasing in 2025, you are absolutely, write this down, you are absolutely doing it backwards. This has not been the market to chase in. This has not been the market to like come in and say, hey, these earnings are good. We're breaking out. We're going. Lots of breakouts have turned into fakeouts here. So I think it continues. I think, we got to think about it on the opposite side of it here too, though, where you're getting stocks breaking down and looking like, oh man, the end is near. And I don't think that's the case here either. So I look at a Robinhood and say, hey, this stock was $66 5 days ago. It's still loved. It's still firing on all cylinders. I mean, Vlad's done so many things very well there. I know a lot of people on social media hate him for the whole GameStop stuff, but he's done and run this business very well. I mean, I think there's going to be buyers eventually. Maybe you wait for a double bottom. Maybe you wait for, a chance in, instead of just trying to cherry pick the spot. Maybe to your point, you wait until, you see it stop going down and then go sideways. But Eric was just saying that for a couple of days and stop going down. But I think, it's hard to just say that it's over for Robinhood. It's over for Palantir. It's over for Kava. It's over for all these Momo names. Because I still think we're just in a range. So I'm not overly bearish here. Lots of people asking, am I bearish? I'm not. I'm just kind of selling rips and buying dips. I look at Micron. I sold that last week at 106. In 2 days, it's back at 100. I've bought this thing 3 times now in the $90 to $92 area and dumped it 104 to 105. I'm going to keep doing it until it doesn't work anymore. I hope it comes down to 93, 92. I'm going to buy it again. So, I mean, just having your levels. Maybe that's, this is where we could bring it to Joel too, because Joel's so good with the levels. Maybe just having your levels. When you're range-bound trading, levels work very well, Joel.
Until they don't. Until they
don't.
And we were at the top of the range. We talked about it. Where got lulled into complacency. Now I was looking at the lows, and the only thing below the lows we have are the deep seek lows. But market found support. Today's gonna be a good day. They can hold on. I'm not saying we have to be up 32 handles on the day, but if they can protect this and have, and protect that low from Friday, then, I got NVIDIA. Obviously, that's going to be the mover for the week. But before we did a few tickers, Christian has mentioned more than once about the seasonality. The second half of February could be trouble. And I believe this is something from Ryan Carson. So go over that real quick for us, Christian.
Yeah, Ryan Dietrich also tweeted this out, and he tweeted this out like last week at some point, and I think that just as to the strategy that we're talking about, be patient, because this month is we're in the last just this week is the last week of February. So have the perspective of longer than this week. And if things continue to dip, I think, have those names that you're ready and that you really want to buy, because you could get cheaper prices this week. And it's also the fact of scaling in too, because this is not a strong seasonal week. So you're going against the grain if you're going out and really buying the dip hard, right? You know that right now this is not a strong time, but once we get to March, things change. So you kind of just have to be patient, have some perspective, and understand that right now we're in a weak seasonal period, and the market's doing what it's basically says seasonality is showing us, and saying that, hey, this is a weak time of the year. So that helps you kind of be prepared, I think, a little bit.
2 minutes here. Want to get, some closing thoughts. We've got big earnings coming this week, so I also just want to mention those earnings. Tonight, you got HIMS is HIMS due to report here tonight? I think it is. It got hit so hard last time or last week. You think about that, but I've got HIMS on my list. I believe it's due to report tonight, unless my list is wrong. Zoom is going to report, which is always an interesting one. It moves around, usually 7, 8, 10% sometimes. Kava on Tuesday, First Solar. Axon, which is a Momo name that has given back a lot of Momo. Some of the bars have come down here, like the HIMS, the Axon. Look at AXON. We haven't even talked about that one. I mean, holy cow. That just went from an all-time high at 715 to 515 in 3 trading sessions. It just gave back 3 months of gains in 3 sessions. That's incredible. Again, the Trump and, there was the same thing with Palantir, that headline where defense spending might go down, that, is hitting it. But I mean, the bar's got to be a little bit lower for Axon now, I would think. No?
Yes. And I mean, so yeah, is this name also report this week? Yeah, right. I mean,
pardon me?
This name also reports this week, right? Is that
yeah, Tuesday.
Yeah. Yeah, amazing.
So, I mean,
some of these,
this is tomorrow.
Yeah, some of these names that are going to report, it's going to be so interesting. All the ones that we've mentioned, and then this little AI company too. I don't know if you guys have heard about it. Reports on Wednesday too.
NVIDIA, obviously.
I'm being sarcastic, of course. Sorry.
We know.
And you know what? It works again. Being long stocks ahead of reports here. I preach the strategy. It's one of the main strategies. It's such a simplistic strategy. By buying the NVIDIA close on Friday, And hedge with Qs, hedge with what you want. Qs only up 0.57%. Nvidia's up 2%. People get excited about upcoming reports. And, you're seeing the big pop in Nvidia here this morning. I mean, it's across the board. Salesforce reports on Wednesday. It's up this morning. Snowflake reports on Wednesday. It's up this morning. A lot of stocks are up, but these stocks are up all well more than the market is. So, even if you're hedging, which I often do, try to, take some of that market risk down or that Trump risk overnight, it works really well. So we got some big reports this week. We never seem to leave earnings season.
No, we never do. And this HIMS, now we were covering this on Friday, and it was late in the show. And Dennis, you mentioned the acquisition that it did, and we kind of filtered through it. And so the acquisition was for a company that makes peptides, and that's what you use for the weight loss drugs. And then I don't know if it came out simultaneously or a few minutes afterwards, is that market has become saturated, that there's not shortages of Ozempic and there's not shortages of Wegovy. And so I think the street took it out, to the woodshed after that ridiculous move on Wednesday. Man, I tell you, it coming into this, it's a tough call here. I'd say you did. Let's see what happens at 45 over the next couple days, because it paused there at 45. It had the breakout, and then it had the news and the follow through. So I'll give you 2-star support, but big fall for HIMS. Tuesday, or Christian, you got any final comments before
Christian
I
had to
reveal?
go because we're running overtime
Christian,
there, and
okay,
obviously he had to
9:02.
bounce. I just want to
Yesterday,
stay on HIMS too. Like, I mean, again, I just want to reiterate that the bar is much lower for a lot of these stocks now. So you've got to think about that. I mean, you're coming in here and saying, HIMS, this is done. I'm selling it now. 47. The stock was $72 3 days ago. Like, if you're selling it now at 47 bucks, again, you're doing it backwards, folks. Holy cow, man, you're doing it backwards. I mean, we talked about HIMS being a short up, at 65, 66 because Palantir had broken down. And you know what? That worked out perfectly, actually. So, I mean, now I was short the thing. I'd be bringing it in at this point in time. One, because I think it is on my schedule. Can you verify that, chat, if you can verify the HIMS reports tonight? Because it is on my schedule for tonight. I'd like to know that
it
as
is.
well.
It's on mine
It
too.
is? You've got it verified too? Okay.
Yep.
So I think the bar is really low here. I think the bar just went, and it might be like, all of a sudden it's down here again this morning. I think you may be taking a shot on it. Honestly, I think the earnings could be okay. Do I sell the earnings pop? If it pops on earnings, yeah. But I think, this might be one I actually take into earnings. I don't do that very much, but I might actually buy this thing, and again, maybe not I'm buying at 47 this morning. Maybe I am. I don't have a position in it now. So, I haven't decided if I'm not going to go out like a huge position in it or anything, because, there's huge risk. Maybe we should just go look at that expected move here right now quickly. And we're just going a little bit over time here, Joel. I know, HIMS, just going to quickly give you the expected move here. So moving into this week's option chain, I didn't have my options open.
$8.
$8?
That's my guess.
Oh, that's your guess. Oh, I thought you knew already. So It's not, the problem is the options here. There's not a lot of them out there. So why is that the case? I'm not getting that. Somebody else have
What
the
do they have? The
expected move here?
45s and the 50s?
Yeah, I don't know. My options platform, I didn't have it open. I don't think it's working here. Can you guys grab the expected move, because it's not working for me here? Chat will grab it.
Okay.
I don't know if yours the options platform. I don't know. I can't get it working here. I just brought it up and it's just not open here right now. I wasn't prepared for it. So anyways,
Okay.
HIMS, you just have the calls and the puts and close to strike, but there isn't a lot of options even listed on mine right now. I think that's a mistake though. I think there's got to be options there. So anyways, I think the bar is low here. I think I wouldn't be surprised if you see an earnings bounce on this.
Okay. We're going to go with a technical Tuesday tomorrow. And we're going to bring in one of the best technicians out there and one of everyone's favorite technicians. He hasn't been on the show for a while. He's actually a guest that Dennis brought into the show. We had him on a few times, and then we had him on again. And Dennis is not going to be able to get Brian Shannon of Alpha Trends.
Brian's coming.
Yep,
Great.
Brian's going to be joining us.
Yeah, we love Brian Shannon. Awesome. Follow on Twitter.
Ooh.
I've followed him for years. Has great commentary here. Very excited. That's awesome.
Boy, they're saying $11.50, $12 for that expected move.
A huge expected move. So think about that on the $12 expected move. That size appropriately there, because we're sometimes wrong. Maybe the earnings aren't good. Maybe they say something that isn't good. It's always possible, but I'm leaning towards the long side on this one.
Okay. Thanks for joining us here on Pre-Market Prep. We'll be back with you guys tomorrow morning. You know where to find us.